All right, let's jump into things. Where are we at? It's a little bit late. It's 11:29. It is on Sunday evening. Jeez, excuse me, to sort of start off there. It's 17th of May, and so we just ticked over into the second half of the month and that, and what it was quite a quite a sort of spectacular sort of end to the week, and we're really seeing the signs of, I guess, what you could just say. I mean, look, I've got the Aussie chart up here, is risk off at the moment, and it's just funny because you can't just so frequently say, it's risk on, risk off, because depending what you're trading and that, I mean, look, if you were to say risk off, well, and you flick over to equity markets and you'd be like, oh, well, maybe that's sort of coming down there a bit, but that's not sort of dictating a sort of risk off. But I think sort of in the sense of sort of the US dollar seeing some strength, we're seeing Aussie, as you can see right here, is coming off, breaking of this wedge after negative divergence. That sort of coming to the downside there as well. There you kind of risk off sort of parameters. I mean, gold and silver. Now, these things obviously have the ability, and I've said this a number of times, that they have the sort of ability to wear both hats, so to speak, in that. Like, they can be risk on, they can be risk off. I mean, you know, traditionally, and by tradition, I probably actually mean sort of like 10, 15 years ago, probably, maybe not that long ago, but that was the sort of consensus back then, that sort of like gold was your risk off play. Excuse me. But of course, sort of things have changed nowadays, and there's so many. Sort of, I say there's so many new places. I guess you got Bitcoin and these kind of areas, in which you can see sort of capital flow into and that. But the markets are not sort of as easy and cut and dry as, okay, risk off, boom, let's buy gold. Certainly, there are sort of snippets of that kind of stuff, like when war and that kind of breaks out, gold would definitely get a bit of a push up. But certainly, it doesn't seem to be more than the kind of knee-jerk reaction. And with that kind of sort of stuff, if the market is in this sort of risk-off sort of period, and that at the moment, well, we're seeing gold and silver come down, that would mean that gold and silver are actually acting as risk-on assets. So, gold and Aussie obviously sort of trailing together. We've got the US dollar breaking out there a little bit. Oil's a different sort of different beast altogether, of course, and that. And I'll touch on the oil market a little bit there, because I do think that we could potentially be in for quite some high sort of levels for a little bit here with oil sort of moving forward. I don't think things are quite done yet, and it's funny. It's sort of like there was that period there. At the moment, it seems like I'm saying everything's funny, but I don't know how much of this is actually funny. But for a couple of weeks or month or two there, and that every weekend was like, oh, what's going to happen? What's going to happen? And the all the sort of markets are on edge over the weekends, and I haven't looked at the last second in that, but the weekend markets at the moment are like just again quiet. So I'll see if I can flick over to. Oh, this is we've got the silver. This is a silver chart that we sort of saying this to somebody before. Actually, what I'll do, I'll copy this. This is the most exciting, riveting stuff to see. But we can actually sort of trade. I'll come back to this a little bit later. I'll find where that silver chart is loaded. It's not this one. Here we go. Look at that. Oh. And that is, as you can see here, coming up to this rejection from the top over here. Where's it going? Coming down to the bottom side here. Where is it? Bang, it's at the bottom. Anyway, I'll get back to that a little bit later. What I was actually going to bring up was just to have a quick look at what the weekend markets were doing. So I'll go back to where we were. We were on Aussie, weren't we? Aussie. So this is what we were looking at. Anyway, the point is, apart from the last sort of 30 seconds of just talking, sort of rambling on, weekend markets as they are at the moment, gold literally no change, like not even a snippet. But all the other bits and pieces are just not really doing anything. Like, so, what I was kind of getting at, well, what I am getting at with this is that the last couple of weeks, months, and that it's been very busy over the weekends. It's like, oh, what's going to happen? What's going to happen? What's the headline going to happen? What's going to happen with Iran? It's nothing at the moment. They're quietening down, no headlines. Even when they do get headlines and that at the moment, the market reactions are becoming less and less. And we saw the same thing in Ukraine as well. And I guess this is just, at least for the time being, the blueprint for these sort of like global, sort of larger scale wars that break out, being that sort of as it first happens, As I said, gold will fire up a little bit. After a while, it calms down. Headlines come out, markets fly one way, other way, one way, other way, and then after a while, they start to go, yeah, okay, we get it, fine, move on. And we're seeing the same thing because, as I keep saying, like, Ukraine war is still technically going on at the moment. So anyway, well, we'll see how that happens. Economic data is going to be coming back to the forefront, in my opinion, which, I mean, it should always be there, but it's really been pretty quiet for a bit. But the US is actually producing some pretty decent numbers. We had NFP the other week, and by decent numbers, I mean decent numbers for US dollar strength. We had NFP beat the other week. Those weekly unemployment numbers are still hanging around the 200 levels. So they're still like employing people at the moment. Weekly job claims. I can't remember actually, so I won't quote that exactly. But still, I think that in the sort of like summary of that, the job side of the market are actually not doing too bad. So I should actually be going over the DXY chart as I say all this sort of stuff, but that's just a little bit of a sort of an overview of what we've sort of been seeing with it all, and it's translating to US dollar strength. So I'll get back to that when we get onto the dollar chart, but this is Aussie, and so we can start off with this here. We can see we had this big sort of triangle forming up the top over here. Now, we only have the two touches over here to really sort of say that it's a triangle, so it's not really that, but as you can see, it really did start to sort of grind a little bit higher here. I mean, RBA's been still relatively hawkish with their sort of talk with it all. However, there's some sort of speculation now that the next move may be a hold. And of course, with currencies and strength and positioning for these kind of things, it's all done prior to the rate decision. You don't wait till the rate decision and then go, oh, they're raising rates. Okay, I'll buy Aussie. That can be the case in that, but generally what you'll sort of find with these things, the positioning is done sort of well before that. And so we've been seeing, strong high CPI, RBA quite hawkish. It's been very resilient, very strong coming out the top. These are 4-year highs for the Aussie. But now we're sort of talking about maybe coming on a bit of a hold. Okay, that's one thing. Plus, we're seeing that US dollar strength. That's a second hit for it all. And what happened to Aussie? Boom, it sort of kind of fell off the top over here. So if we go, that's a bit of an overview. If we look at sort of what's actually happening in the sense of the chart here, the first sort of target that I would say we're pretty much sort of destined to come into here is probably down to 71.10. Yeah, 71.10, 71.15 anyway. This little support that we did have. Let's fix that actually. Fix it up a little bit further through there. You get in the confluence of the 38%. So look, I mean, all in all, Aussie could still stay bid, and the 38% pullback is definitely decent with these kind of sort of like sort of angled breaks, so to speak. Like this is your trend, kind of sort of moving up like this. Very, very rarely, I would say, would you get something that just goes like this and just plop down to these levels over here. Doesn't mean it can't get here, 100%. I mean, this is only back to 70, 140 points. Decentish kind of move, but, if it gets on a bit of a trend and a bit of a cool off, it's certainly possible that it could get down there. However, I don't think it's going to go there in one move. But what I do think we could potentially be in for is the first of a test down into this 71.10 area, a potential bounce back up. Now that bounce, depending, again, keep your eye on the dollar and what's happening, because the dollar's going to be the driver. You would say it could get all the way back up to 72.10. Retest, and this is not one session kind of movements, but the idea is generally, if this were to be a perfectly, which things are never perfect, of course, technical setup, you come down here, you test their support, buys here, these guys are like, yeah, it's great, come back up here, retest your breakout level, where it broke this sort of rising support down here, find resistance here, target this low here, and then if you broke this the second time, that's where you'd be destined to go. In a general sort of idea of sort of how these sort of things structurally would work. So I would say certainly start to be looking to sort of sell into rips with the Aussie. I do think that we are probably at least minimum destined to coming to this 70-cent mark. However, I wouldn't be, if we get another sort of push down into this level 71s, I wouldn't be looking necessarily for this thing to break first time. I would expect a little bit of a bounce here. As I said, look, a technical kind of thing would say, okay, you come back up to this break level over here, and then if the sellers step in there again, bang, that's when you come down to 70. However, we'll get to this bounce part, and we'll work that out when we get to it. But I would say in the short term, come Monday, this kind of week, Monday, Tuesday, this week, we could see some continuation of these moves that we saw into the end of the week. It was a nice enough sort of close. It's not like close with a sort of full flat bottom. We've got a negative divergence on the daily. We've got a target, reasonable target for it down here, which is only really another 30 points or so. See what happens here. It could always dip under here and then sort of come back up. But I still think if we do get down to these levels over here, around sort of 71, we probably will see some sort of buy effort coming up over here. Quickly with this sort of thing as well, just to make it a little bit confusing, I don't know if you want to call it confusing, look at this. What's just a little bit higher than where we currently are with the dollar? Gap close. So I would say that if you sort of think, and of course I know Aussie's not part of the market, but this is what the cross chart confluence would be, is a little bit more upside just in this move here. Close the gap, gets a reaction. I mean, look at what happened down here when we first closed this gap. Look at the reaction. I mean, I'm not saying we're going to get a massive bang reaction that big, but close the gap, market reacts. Close the gap, market reacts. That could, at the same time, perfectly align with a little bit more continuation of that move that we're seeing there. Hit this level here, market goes, hey, we've closed the gap on the dollar, let's sell it off. Aussie buying. These are the kind of things that I'm looking at to sort of see if we see these things coincide at the same time. I'm definitely going to be revisiting this because I think that definitely looks like what we could be doing. If we close the gap on the dollar and see a bit of a sell-off, even though Aussie's not part of DXY, use DXY as like a barometer for the market, sort of consensus towards the US dollar in a broad sense. Then we see a little bit of US dollar selling, which when you're selling US dollar, it's going to make the Aussie dollar stronger. That's why you get the bounce back up over here. Then we see what happens with that sort of sell down with the dollar, how deep it goes, and where we could potentially come up here. But long story short with this, I think we have a little bit of downside early into the week before we sort of come down around, 71 cents, and then I wouldn't be surprised if we get a little bit of a bounce up there. The fact that we've got the negative divergence, and it's on the daily, I don't think this is going to be something that comes down here and then, hey, look, on with the show. I think the fact that you broke the triangle, you got the negative divergence, means that we need to honor that at some stage, which means further downside here. As you can see, I'm kind of looking around that 61%, which is around 70 cents. I think that's the kind of thing that we're looking for here. So early downside and then sell into rips, maybe sort of through the rest of the week. We'll see how big that bounce comes through there. All right, so moving on. So, look, I may as well sort of jump onto the dollar there because we have really sort of seen this thing come back very strong, particularly sort of through this week here. And you can see this was obviously sort of, we had that gap previously from, whenever the hell this was start of March or something, took a while, got back over here. And this is the thing, like, gaps and gap theory and all this kind of stuff, I say, particularly with the dollar, when you're looking at gaps, like a gap's pretty much every session, one way or another. But you've got a couple of things when you're trading and watching DXY for the gaps. And the first thing is, if a gap's up, it's generally going to try and close it straight away within the session, within, it could be half an hour, sort of an hour, half an hour, an hour. If it doesn't do it in that half an hour, an hour, then you're looking into that Euro session for that evening. So call it 8 hours. If it hasn't closed it by the Euro session, I'm kind of almost not looking at the US session. I'm kind of putting in the camp it's going to take at least 2 weeks to close. And we've seen this a couple of times with these large gaps that I sort of mark out here that, it's taking, I mean, this one, where we have this one, took about 5 or 6 days or so to close. But, these larger ones here, that took about a month or so to close, month and a half to close. We've still got this gap over here. And this is the thing with the gaps, they do close. Very rarely, only once have I seen a gap on the dollar not close for, it was probably about 8 months. I think it was if I can find it in 2 seconds. It was way up the top over here. It was actually, I think it was this one here. What else? This is the thing, when you trade these things so ridiculously, you always kind of vaguely where it is. And here's a gap just here. Look, let's just call it even just this small part here, right? That's a gap there. This is the only time I've seen it not close for a period. And look at this came up, kissed it, back down, back down, back down, back down, back down. What happened? Boom, closed it. You know what I mean? Like, this is a very rare occurrence, though, for this. This is on a daily here, and we're talking from November to November. So 1 year that sort of held open. Okay, that's an extreme example. But regardless of that, find me a gap on the chart that hasn't closed. I mean, we've got this little bit here, but you've got the wick, so you can see these ones close here as well. But anyway, regardless of all this, where we're at the moment, they are magnets. They are generally something that is going to close. And I've been sort of touting that while we've been down at these lower levels here, and I've still been sort of like, basically sort of positioning myself across the market based on this kind of stuff. Now, that means that, as I said earlier, when I was looking at the Aussie chart, that, we could still see some upside here. I mean, if this is on the daily, this has got a nice sort of push with the RSI here. Definitely could see this thing come up a little bit higher. However, closing gaps, as I said, you do see a fast reaction generally from these things. So I wouldn't be surprised if we get some pushback here. Is it enough to close the whole thing? Probably not. I don't think it is. And this is when you look at the other factors. And the other factors, I'm jumping around sort of 10 charts here, but it is all working together to sort of paint a picture. And then you look at what's happening with the US 10. Like, this, I saw this coming into sort of like around Friday. This thing just absolutely exploded to the top side here. Now, some people say you can't chart yields and this kind of stuff. And yeah, to a certain degree you can't, but I mean, look at this flag through here. I mean, that worked out pretty well. Yeah, I've got a couple of bits and pieces. So anyway, look, I don't sort of base my strategy based on that. Anyway, point is that yields moving up, 98% of the time is going to see the currency strengthen a little bit. And sometimes that's offset because, the other currencies yields, I mean, we're probably seeing yields go up kind of everywhere, aren't we? But the thing is that the dollar being sort of king of it all is certainly pushing to the top side here, and that's a big breakout of the yields. We're probably coming into a little bit of resistance around these kind of levels here as well. So 465 and 46, call it 46, 465, these guys here. I wouldn't be surprised if we do see some sort of pushback here, but does it mean that the whole thing's going to just fall apart? Probably not. If anything, it's probably going to be something like that. You're going to get a reaction. You're going to see maybe a little bit of cooling, but it doesn't mean that the whole thing's just going to turn over and come back down here. And that's what I'm getting to with the dollar, if you look at it. So if we look at the dollar, it's coming up into its gap as well. It's coming up into a sort of major kind of resistance through here. Does that mean that it's all over and it's just going to go back down? The gap, no. This resistance is going to be heavy. It's going to be hard. It's held a lot of times. But again, you got to look at this, and this is what I talk about with these angled breakouts. Very rarely does something break and just go. It comes back, retests the breakout level. Now its main target is to get back up here one more time and see what happens. And I actually skipped the video last week, but if you go back to a couple of the other videos that I've been doing, I've been a little bit quieter since I busted my arm, but I'm getting back a little bit now. But the point is, I said, look, the market is going to give it one more hurrah here. Hence these arrows that I've got in the zone. This is the make or break, I think, for me, for the dollar. Because we've got the angled break, we've got the breakout, we've got the back test, we've got a little double internal sort of double bottom here. We're moving back up. I said one more test of 100, and I think that's going to be it one way or another. We're going to get a break, and I think we're looking to move much, much higher, at least a 102 next, or thereabouts, but potentially 104. Even higher, we could actually go to make a case for that as well. Or if the market has one more attempt here and it smacks it down here, I think we come back to 96. Now, that's not my base case. I don't think 96 is the base case. Like I said, if you look at yields, you look at the dollar, metals coming off at the moment, you look at sort of, and this is actually, I touched on this before, and then I sort of stopped myself in that, but you've got stronger jobs. Remember, the job situation was really one of the big anchors that was killing dollar strength. Well, not even dollar strength. It was just one of the sort of anchors of the dollar. So let me get this thing off here. Through this whole period over here, dollar's over, de-dollarization. Yeah, jobs are stuffed. excuse me, before the war, they were talking about three potential cuts. Cuts are obviously negative for any currency, but market positions for that. Why would you want to buy it when you got three cuts coming in this year? Well, that's not the case anymore. You've now got jobs not being so much of an issue. They're a little bit stronger, so that's not an issue. So then you think, what's the other issue? They're the same as the RBA. They got the dual mandate. They've got inflation on one side, and they got jobs on the other side. Jobs, not an issue, because remember, if jobs are the issue, you need to their response is to cut. Jobs are an issue. We talk about cuts. Dollar is weak. All this period down here. Now you say, well, what's happening now? Well, jobs aren't so much of an issue. We don't need to cut. So you look at the other side of it. The other side of it being inflation. Inflation, we're getting better, 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 better. Now inflation, we've got the oil shock inflation. I think we had it sort of about, we had CPI this week, didn't we? I think for the US. 3.8. I mean, certainly not moving in the right direction. Core, above expectations. Year on year, above expectations. Their month on month seems down and flat. I'm not sure what that would be down if we got, excuse me, the oil stuff in there. But all in all, headline figures moving up. What chart are we on this one here? Regardless of all that, inflation is an issue. Jobs are not an issue. I might be simplifying here, but this is the kind of attitude towards it. If inflation's an issue, you need to do something about it. What do they do about it? They need to hike rates. We see this and that, and that's why you got US 10s obviously sort of moving up there a little bit there as well. If they're going to hike rates, that's strong, positive for any currency, but we're talking about the dollar, it's positive for the dollar. The only thing that would kind of like counter that is if jobs were bad as well. So if you had high inflation, the kind of thing is you need to raise rates. Hold on, wait, we can't do it because jobs are bad, because that gives you that kind of stagflation kind of sort of scenario. Excuse me. But jobs aren't bad, so there's nothing standing in its way. So quite frankly, it kind of seems like pretty much a sort of straightforward idea that whether they hike or not, the market's going to start positioning themselves like they will hike. Till we see inflation come down, till we see weaker jobs, that seems to be the attitude and the way that you're probably going to see a bunch of talk. And that's the sort of movement for further forward, sort of going forward with it all. So I think that sort of, yes, we could get a little bit of an early pop up. Yes, we could get a little bit of a sell down correction because the market says, hey, we just closed the gap. Let's take the profit kind of thing. Does it change the overall picture is what I'm getting at. And no, I don't think it does. So I think that sort of, we could see a push up. Yeah, we could see a push down. But I think this is a buy the dip kind of kind of movement. Should we see a pushback from that closing the gap, then we're targeting around that sort of 96 to 100 area. Sorry, 99.9 to 100 area, this zone over here, and this will be the make or break area. If we break through this and nothing's changed, i.e. inflation's still hot, jobs are still okay, I think we're going higher. That's how I paint the sort of the scenario for how I think the dollar may sort of be moving forward. So early push up, close the gap, look for some profit taking, treat that as a buy the dip situation. All right, okay, just writing up the notes here. I haven't been able to type for I don't know, a couple of months or so, a month and a bit now, nearly 2 months and that. And it's actually good to sort of like actually get the thoughts sort of thought out through here. Yes, it's a bit of rambling. That's all right. This is mainly just for me anyway. And then to actually sort of put it down with a couple more bits of rambling, just with the typing though, and start to sort of paint that picture. But I think certainly, we could look for a little bit of a push up here, but I'll be looking for a buy the dip in this sort of situation. All right, let's pump on. We got gold. Which chart are we using for gold? Could be this one here. Actually, let me see. This is. I'm gonna need to clean up these charts again. I think getting a little messy. Gold chart. Oh no, here we go. This is a problem with having like 8 gold charts. So let's go with this top line here. See if we can get down into a lower time frame. See how we sort of pick this one up. All right. So this wasn't the gold chart we were using. Anyway, whatever. Let's just use this one. let's get some of this stuff off. Get you off there. That's that little range movement. As you can see, double bottom. Bang, completed that. All right, enough of what happened in the past. You can see these basically, look, we did have a little bit of a double bottom, a little range down here. We completed the measured move up over here. Bottom of the supports from previously back over here, provided with a top. Back down to the midway of this channel, which was resistance, resistance, support. And it broke and it just got clobbered. It got absolutely sort of clobbered through last week. So let's get on to a little bit of a lower time frame, because this is the thing. Of course, I sort of like trade these things with a bunch of different charts and that. But what I was looking at, and this was driving me absolutely nuts, and I'm sure anybody trading gold was, but these are really important kind of things to. I don't know if you're important, but let's fix this up. When you see these things, that's funny because I actually sort of said to my father as well. Oh, man, it sounds like everything's funny, isn't it? Uh, you see these parts like this, right? And you're like, okay, here we go. Boom, consolidation. Yep, little test out the top, fake out the top. It's coming down. No, boom, I held the bottom over here. Oh no, wait, no. Here we go. Second move out the top. Boom, boom, boom. And the thing is, when you have these things and you've got like a little sort of consolidation, and it's coming to a point, and you get a break, but it doesn't break. And then you're like, hold on, wait, that one didn't work. Update this. Okay, maybe it was this. Maybe this is the line we're looking at here. Break up here. Again, fake breakout. Comes down on the bottom over here. And this was, if you get into this thing here, I know this isn't super exciting for other people, but it's exciting for me, is that if you look at these levels here, that it was taking out the highs and lows from, these things were only getting taken out by like a couple of points. Like here's your high here. Oh, cool. Okay, I short it. Boom, takes you out. What does it do as soon as it takes you out? Comes back down. Here's your lows over here. Here's your lows over here. Takes you out. Takes you out. What does it do? Oh, here we go. Fake breakout to the top side. Comes back down. Oh, no. Takes out the thing by a point. Flies back up. Okay, shorted this one here. Just a little bit. Comes down here. Does the same thing again. And the point I'm getting at is sort of like that this is trying, like when you see this happening, you know a move is coming. You know something big is coming, because when it's taking out both sides by a couple of points, that's the key indicator, in my opinion, in this of the sort of takeaway. When you see these things, a couple of things that I look for, and I saw this coming on the sorry, sort of like through the week. It was driving me nuts, but I held my positions and that, which for me is pretty yes, because I'm a lot more of a short-term trader. But I was, sending a few abusive messages because it was actually frustrating as hell. And you think, okay, here's maybe this one here, or what was the other one that would go up over here? And you see these sort of things where basically your lines aren't working. Like, your technicals aren't working. Like this kind of thing here. Like, consolidated, no, we've out to the top side, no. Down to the bottom side, no. Out to the top side, no. Down to the bottom side, no. And you can't pick anything that's happening. But what it is actually doing is blowing people out. They're blowing people out. They get short, they get stopped out, reverses. They get long, stops out, reverses. It's clearing the book on both sides. It's getting rid of all the people that are just like, oh yeah, I trade the little moves. And this is me. I trade the smaller, relatively smaller moves. Not always, of course, but shorter time frames, these kind of things. So you try and trade like this, and okay, I'll hold it because we've had the breakout that got rejected should come down here. Oh no, didn't do that. No, you know what I mean. It doesn't matter whether you were long or short. If people were trading these like textbook positions with textbook stops, oh, here's the high I shorted, or I short in here and put my stop above the high. Well, you're taken out. I got long, okay, put my stop underneath the lows, no, you got taken out, and then it reverses. So what do? They get back into the position again, and they get blown out a second or a third or a fourth time. So generally when you see these things happening, well, I see these things, I sort of say that, look, this is blowing people out financially, it's blowing them out mentally, and then when you get to this point, you're like, no, I just can't do it. Whatever, I've got to trade something. I need to take a break. Or you can't, so you can't sort of continue mentally, can't continue financially because it's just driving you nuts and you've blown a whole bunch of your stops. What happens? This move happens. Bang, that comes down to the bottom side here. So this, I won't bother going through the whole conversation, but to put in case in point, This is a message that I was saying on, I was going to say Thursday, 3 o'clock. So what was that? Thursday, 3 o'clock. So around this point just here, Thursday, 3:01. So it's around 3 o'clock, 3 o'clock, or whatever. I said, these are bullshit periods. Usually result in a big move, which will break either way. And that's the thing, you don't know. You could say, hey, yeah, it's going to continue down this way. You could say it's moving up the other side. I was short with these things in it. But both sides are holding. Just depends what the dollar does. And what did I just show 2 seconds ago? What happened with the dollar? Well, the dollar absolutely ripped through these sort of periods here. Where was it? The dollar on Thursday, 3 o'clock. This is it. So this is where the dollar was. Thursday, 3 o'clock. Depends what the dollar does. Well, what did the dollar do? Dollar went to the top side. What did I say at the very start of this thing? That, gold and dollar, obviously I didn't say that at the start, but sort of, the dollar moving up and gold moving down is kind of what we're kind of looking at for as a theme at the moment. But, it depends what the dollar does here, and, just going on about the Xi and Trump thing, but you'd think that that would benefit the dollar. And of course, who the fuck knows? As you can see, you could probably tell from some of my language here, the bullshit and the fucks and all this, that I was a little bit annoyed. And this is, I'm not bullshitting. I mean, this analysis I like to put out, but really I kind of do it mainly just for myself. But the point that I'm getting at with all this sort of dribble is this is where we're at. I said, what happens with the dollar? Dollar looks like it could be benefiting. Well, where we do, we got downside with gold, and it played out very well, mainly through Friday's session, but that was the direction that we got. So anyway, the whole sort of point of it, and this is the thing, this is a weekend recap of what's happened through the week. That's what we saw. That's cool. Really kind of struggled a little bit to sort of get a bit of a bounce down over here, but look at where it bounced from. This support. Of course it's going to bounce from about here. This is where we're sort of seeing, when you have these levels like this, geez, I feel like I haven't done these analysis in a long time. Pinpoint. So the blue ones, if we have got these sort of points here where we know that the buyers are, what happens when it first comes back into this thing? Well, it bounces back up, and that the buyers have another go, the shorts take some profit. That's fine. And this is what I'm saying about when you're looking at the dollar and all these kind of things, you hit your targets. It doesn't mean game over. It doesn't mean, okay, now that's the very bottom, we're going back up. But when you revisit a level that you haven't visited for a long time, very, 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 very rarely will you ever sort of break through that level first go. You'll see a reaction, and that's what we saw. And this is, 53.10, bounce $56. I mean, that's a decent little bounce in 2 hours. But after that, what did the market do? They said, cool, I want to sell some more. I want to sell some more. And we're coming into the end of the week here, which, the last couple of hours a week, we don't really regard too much. But the thing is, if we step back after all of this, get this out of the way, and we say, where are we actually at? Well, we're right down on supports. This thing, through this last little period here, ripped all the way back up into overbought, which at the bottom level here, 1, 2, 3 drive down, RSI at this stage was in the middle here, so it looks like it wants to go higher, 3 drives at the bottom. You would expect a reaction more than this, but the market didn't do it. Even with all that 3 drive and the negative divergence and all this kind of stuff, the market didn't bounce up and hold that bounce. So I do think that we are potentially at least going to have a test of this 45 here. I think the dollar is definitely going to sort of have something to say, potentially a bit higher. And again, with these sort of things, nothing's 1-to-1, but start to see how these things are in potential areas where we could see reactions, right? So the dollar, again, we were looking, close the gap, see some profit. So capital flows into the dollar, pushes, where does it come from? It comes from gold. Into support again. A lot of people, even like I'm saying at the moment, hey, I think we're going to come down here. So what will people be doing? Oh, did you see how badly gold got smashed? Boom, 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 boom. Yeah, they'll be shorting this stuff. They'll have their stops here, 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 here. So what's going to happen, in my opinion, and how I'm going to position, is that, yeah, we'll get a flow down here. Because a lot of people will see, did you see gold's getting smashed? And they'll sort of go, okay, yeah, wow, I saw that. I'm going to short it first thing Monday. They're going to short here. They're going to put their stops here. What's going to happen? They're going to be right for 15 minutes, 4 hours, whatever, 2 hours, I don't care. I'm not here about time. They're going to be right to get down into this point here. and then we may at the same time see the dollar close that gap. Now, what happens when the dollar closes the gap? People bank profit. The dollar sells off, sells down a bit. Again, it's not a full turnaround, but that's what will happen. You'll see the dollar will sell down a little bit after it closes that gap. Where does that capital go? Well, it goes everywhere. But where's one thing particular, because we're talking about gold, where does it go? It flows back into the gold market. And so people start to go, hold on, wait, gold's hit support, 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 double bottoms. Here we go. And, everybody's getting back into gold. We could see a rally up on gold here. But that's fine because, that's not how we sort of work. We don't work with one break. We look for second efforts. Comes back up here. And this is why I say that I think that the dollar, after it closes that gap, will be a buy the dip situation, because I think gold's going to get that sort of movement back up here. They're going to hit all these stops, all the people that are sort of jumping on first thing Monday morning and going, hey, look at me, I'm trading gold, let's sell it. They're all going to get taken out. That's a pain trade for you there. Once they've sort of taken out all these stops, then they go, okay, that's enough. Defining move. And they'll start to drive this thing down here again. If you come back down here again, that's when I reckon you potentially go under 4,500. So all that said, I do think we could go lower on gold. When we start to sort of drag it out, then we're starting to look at 4,400, potentially 4,300 as the next realistic targets. Should you break here? You break 4,500, we're looking for 44.20. Under 44.20, you're looking at 43.60. Let me just put a couple of marks in here. Geez, this is on the 1 hour. Maybe I should jump onto a higher time frame to put these things in, but let's just mark these in here so I'm writing out my notes, and that's a general idea. So I do think we see some continuation early, and then I think we could see a little bit of a bounce. Do you see how the sort of the charts, all these things could potentially? I mean, look, maybe it's set through the week. I'm incredibly wrong, but Aussie looks like it wants to come down. Let's do this. I'll put the two charts side by side. Oh wow, that actually swapped, but it's exactly the same chart, pretty much. Well, it's not the same chart, but it's gold. This one on Aussie. Could you see Aussie sort of come down into its support, gold come down into its support? Both not too far off, both sort of closing near their lows with a little bit of bounces around there. And then we see a bit of a pushback up at the same time with these things. At the same time, if we sort of swap it out and we put the dollar on, what's the dollar doing? The dollar's got that target up over here to close the gap. This is gap here. So close the gap at 99.50. And maybe it reverses back down there then as well. As then, I think that's definitely going to be a buy the dip situation. So I think that's going to be the move like that. But this is kind of the flow that I'll be looking at, and you could transfer this for Aussie or gold. So anyway, let's get back onto gold because that's what we're talking about here. So again, look, early's downside. I think they'll be okay for a bit. I think they'll come up and hit some stops up around these areas over here. We'll get a bounce. It could be a fairly decent bounce as well through the week. And then I think once we start to see this move start to peter out, you look for some resistance, sort of coming around this sort of 50 high 45s. Then we start to see what the market's really going to do. And if it gets up to 45.80 and then it drives back down to 45 and goes through, then I think that's when we're going to be seeing moves a little bit lower there. All right, and let's tick on. So we just got silver to finish this one off. And again, I'm going to fix these charts. By next week, I'll fix we get what charts I'm using. All right, here we go. This is that silver one. And this is what I put up before because it was one of those charts. This is obviously, as you can see, this is that chart here. This is when we're up at the top over here. Because the point I was saying with this one, I was like, I put it in here. So it was around this point here that we were at. We're at. I'm trying to look on. That's a photo. So it was around this point here, around sort of 86. All right, I'll see if I can find the plan. All right. So I know there's is a little bit of like, oh, look what I said, but whatever. This is this is what I was doing. Um, this is the conversation or the snippet of what I did sort of say through here. And I do sort of say I didn't trade silver here. I did chart it. I say there's the three things here. There's analysis, execution, and management. They're the three parts. If you nail those three, you'll make a buck. You'll make a buck. You'll do very well. This one, analysis, 10 out of 10. Execution, 0 out of 10. So obviously without sort of getting the, it's all very well to go, hey, this thing's going to come back down, but it didn't. But as you can see here, I'm trading gold, Aussie, and oil. So they were the things that I was sort of looking at. Anyway, point is, with this is at 11:27, so 11:30 on, where's this? 11:30 on Wednesday. So where's Wednesday? Here. So we're sitting here. Oh, wait, where are we? Sitting here. 86.67. This little point just here, which this is the point of this, where I was saying, hey, here's the resistance, this is the point, up into this resistance area. Why? Because, we've got a nice little channel coming down here. Why? Because we've got a confluence of, resistance over here. Pushed up from, let's get this back out of the way, pushed up from 86 or whatever I said. It's coming to us strong. Did I say a couple more bucks in this? All right, so anyway, as I said, I didn't trade this one, but I was saying, I'm sure I was saying this is coming up into a sort of resistance here. But bear with me 1 second. There we go. So this was just a little bit prior to all that. Anyway, I know it's a whole lot of, well, look at what I said, but did you take the trade? No, but okay, whatever. I know other people that are taking the trade and they make good money, so that's the main point. Anyway, look, silver, I feel within $2 of strong we are within $2 of strong resistance. What I'm saying if it does happen to push higher, and this is at 10:30. So where are we here? Like around here, around this point here, 10:30 at 86.60. I said $2 higher. What do we do? 89.20. 260 higher we went into resistance. What happened? Smashed. And as I can see here, this is obviously a little bit later on, and I was just sort of, I don't know, I sound like I'm just talking myself up, but whatever. When I said, hey, look, this is the chart that I sent, resistance, resistance, why? Where's it going to go? Here's where we're going to go. That's where I sent the message saying, hey, it's going higher, boom, it did, and now it's going back down there. Anyway, enough of all that. Get all this out of the way. That's all great. You can say, yeah, well, did you take the trade? No. Well, okay, whatever. So the point is that we still look at these sort of things here. Now, we're near a very strong kind of rising support here. Again, close near the lows. Oh, look at this. I wouldn't be surprised if we do test this. I mean, we're within, what, 50 cents or something of it. But again, if you've come from the top of a channel and back down to the channel down here, are you going to break it first time? Probably not. I would say almost definitely not. You could. I mean, we could be down here, go down to 70, sorry. However, I don't think you do. I think you get a reaction, we get a bounce. Then potentially we see a second effort down here. And this is how I start to build the charts and I start to build the things. And I think that sort of like, this is why I trade these charts and I put them together, because you start to see the potential flows happening across all of these. And look, this may not happen. I mean, that's the whole point of it. Nothing's gospel, but this is how I approach it all. This is what I have dubbed sort of cross-chart confluence. And it's that you start to see a few things coming into supports all at the same time, coming into resistance all at the same time. You can kind of think that maybe you're going to see a reaction across the market with these things. So a little push down, test the supports, get a bounce up, drag in some more sort of silver longs, because it is a little channel here. It was a very sharp push back down here. What I would be doing through this point here is, though, taking this, put it down the bottom. Let's presume that we come down and bounce off the bottom here, and we start to think, okay, if this thing's going to bounce, where's it going to bounce? So I reckon you got a bit of congestion here. I reckon you might get a bit of a bounce back up, potentially up around 80. But again, if we start to see dollar dip buy situation play out, if we start to see Aussie second effort down through 71, we start to see gold second effort back towards 45, I can pretty much guarantee you silver will be doing this, at least coming down here as well. We're going to test these levels, and if we break here, we break 74.80, give or take a couple of cents for a sec after a bounce, then that's the time you get short and you come back down here. So I'm going to put a little alert here. I'm going to keep this one on as well. I'm going to say second effort through here. So 74.40, it's on there, but whatever. Second effort through here, moving lower, look for dollar push, gold through 4,500. And yeah, pretty much that. We're going to be going a bit low. Hold short. Hold short. Shorty. Hold short. Bang. And that's how I sort of think that we could potentially sort of move this down. Because again, you see people and they're like, wow, I just see silver, it's really coming off. What do? They said it's like, and this all these things flow together. It's like I was saying before with the rate decisions. You don't wait till the rate decision happens and then take your position. The profits don't belong to you. The profits belong to the people that were up here and said, hey, look, I'm short silver. What's going to happen when it gets here? They're going to be taking profit. People are going to be turning on Monday morning going, oh, wow, did you see this? It's coming down. What happens? Bounces up, but I put my stop where the textbook said. I put the stop here where the textbook said. Well, that's great. They're all taken out. Once they're taken out, they're crying. Then you get that second effort moving back down through here, and you see the continuation of the move happen. So again, I wouldn't be surprised if we get gaps down. I don't think we're going to get gaps down because, as I said before, gold literally was on 0%. But if we do see some early moves down with metals, I'll be booking my remaining profit for now. I'll be looking for some of these corrections, but keeping in mind that I do think that this is just going to be a bounce to continuation for the downside. So if you do want to sort of try and get long in these periods here, there's certainly probably a decent trade with a couple of bucks on silver, so 50, 60 buck bounces, 80 buck bounces on potentials on gold. Aussie could get up another cent or so, but I would be surprised if that did, particularly if we do see these things like if the sellers come in at 38% here, Aussie's not going to bounce to 2 cents, put it that way. And then if we do start to see the resistance and profits and these things start to stall around here, and this could come up here and stall, you know what I mean? Most likely, I think, through this congestion area, 38%, yada, yada. I think if we do start to see the market stall around these areas here, watch out for it, because I think that could be a reversal to come back down here. Then you've started to got sharp sell, 38%, second effort, you're targeting those lows. And this is the whole thing, the three waves that I talk about. Wave one, wave two, wave three. Wave three is your defining wave. Double bottom, high, low, and we're going back up, or break those lows. And what happens then? Well, then we repeat the cycle and we come back down like this. As you can see, that very much leads to a lot further downside. Okay, maybe these are just these just picked out numbers here, but certainly you would find a resistance support at 70. Same thing, second effort, breakthrough 70. Well, that actually probably isn't so unrealistic that we could break down to sort of $63. I wouldn't be surprised if we break this channel here. You know what I mean? If we see the dollar, put it actually no. Look, if we break the channel, fine, that's one thing. If we see major breakouts on the dollar breaks above 100, 101, silver's going to 63. I'll put it there. I'll make that into a short if it does happen. All right. Look, I should also just both sides of the coin thing, and sort of preface the idea that this bounce, like this is the short term, little bit low bounce. Okay, that's how I'm looking at it, approaching it currently as I sort of enter into the week. Bigger thing is if I said the dollar does get that major breakout, well, this is potentially come back down lower 60s. That is what would happen if we get the major breakout. Now, I said earlier that this is going to be the make or break for me for the dollar up around this zone here, Tesla 100. If the dollar fails on that break, if the dollar fails on that break, well, what happens? Dollar sells off, that capital has to go somewhere. Metals are going to be the beneficiaries. And we're going to potentially see a continuation, this kind of channel up over here. I don't think that's going to happen, to be honest. But what I do think potentially a way for that to happen would be close the gap, see the bounce back, second effort comes up, test that 100, and that's where you'd be getting this move. Double bottom, dollar sells off, metals rip. That's why I think the dollar is going to be very, very vital. I don't think that's not my base case, but these are the scenarios that we'll be looking for should we sort of start to see what happens with the dollar moving forward. And remember, we're coming into summer as well. Well, US, European summers, we're coming into probably a chilly winter here in Melbourne, but that's neither here nor there. These are the scenarios to look for. So I think for the dollar, I think definitely we've got this area to play in for now. But I think once we have a defined edge here and a defined edge here, I think that break is going to give us the actual direction. And I think that's going to be either dollar breaking out going 104s, metals down to that, maybe we get down to those 50s, who knows, okay, maybe we'll deal with that when we get to that. Or the dollar rejects from 100 one more time, failed breakout, all the capital comes flowing back into the metals and we get long and we move up through there. That's my moves moving forward. All right, quick look at the data coming up this week. Pick out what week we're in. All right, so it's the 18th. Oh, it's 18th. Oh, wow, it's 12:30. Jesus, I've been rambling for 50 minutes. All right, let's have a quick look. Have we got anything of note? I won't bother going through every little bit and piece and that. We've got a couple of this Hunter. I think this Hunter dude's somebody to watch out for in that because I think he's a bit of a sort of a hawkish kind of dude in that with these little comments that can move the market a little bit. We got ADP coming out. This is the weekly one. I actually haven't been paying so super close attention to the weekly ADP numbers, to be honest. Not interested in Canadian data. Not interested in, okay, what are they doing over there? So CPI, oh, they reckon it's coming down in the UK. That's interesting. Oh, that'll be one to watch. Yeah, coming down, okay. Yeah, maybe. We'll see how we go. Well, the Euro people think they're doing. Euros, understand, they don't think they're affected at all. This will be very interesting. And again, this is something you've got to look at. If inflation's an issue over in the US and it's not an issue over in Europe or the UK, well, they don't have the same necessity to raise rates as the Fed do. Well, what's going to happen to the dollar? The dollar's going to rip there because they've got no need to sort of hike rates. So that lowers the demand for the euro. It's fall into place here. Unemployment change. Wow, they've actually gone out of the 20s and they're looking around 15,000 here. This will be one to watch for the Aussie. Again, what's this on Thursday morning? That'll be something to keep in mind there. If we do see a higher move up here, that's what the RBA says they want. They actually want unemployment a little bit higher to help sort of like combat inflation. The idea being with that is really that more people out of jobs that don't have money to spend. So if they don't have money to spend, well, they can't buy things, and then they can't buy things, can't push up prices. That's the theory. Anyway, but we'll see how we go. And then we got a couple of we got PMIs coming on the Thursday there as well. And then actually pretty quiet into the end of the week. We got consumer confidence. So fairly quiet on the data front. All right, that's a long one. Back at it, and let's see how the week goes. That's it from me.